cannabis sector has been a laggard this year. The Global Marijuana Life Sciences Index, which aims to replicate the performance of North American cannabis stocks, is up only about 5% this calendar year. However, our guest top pick has outperformed the index with gains of more than 175%. Let's get more from Kenric Tyghe, a special situations analyst at Canaccord. Kenric, thanks very much indeed for joining us. Start off with Curaleaf, if you would, please.
Absolutely. So Curaleaf has long been one of the darlings in the cannabis space. Very strong domestic footprint combined with a very large international business. That business is heavily represented in Germany and various other international markets. In terms of their domestic footprint, they really are in the key markets in the US, including a high concentration in the Northeast. They have recently signed an agreement to purchase assets in Virginia. As a reminder, Virginia is one of the key catalyst states through the next number of years, with an expected start to adult use in early 2026, which essentially in that first year, Virginia is expected to generate north of $500 million in legal sales, with path to being a $1.8 billion market over the next number of years. So that certainly is one of those names that has been at the forefront of any discussion around the cannabis space, and certainly a name that we've been positive on for a period of time here.
And sorry, what are their big markets again? Henry, just remind us.
Domestically, they have a presence across, the majority of major legal states in the US. Mm-hmm. And then in Europe, they have a presence in Germany, the UK, as two of their largest international markets.
Terrascend is your next idea. They're also active in the States. Tell us what attracts you to this stock.
Sure. So Terrascend is a very concentrated play. The beauty about Terrascend is that they're not in every market in the US, but they are in some of the highest growth markets. Think markets the likes of New Jersey, Maryland, Pennsylvania, Ohio, some combination of either recently legalized adult use markets or markets that are expected to legalize adult use in the short term, specifically a market the likes of Pennsylvania, which I should also highlight Curaleaf, Verano, and Terrascend all present in that market. And that is one of the key states as well to watch over the next couple of years. In fact, in terms of key states, the big catalyst states through any reasonable forecast window here would be Florida on potential adult use, Pennsylvania on potential adult use, and Virginia on the start of adult use sales in early 2026.
And then talk to us about Verano Holdings. They have had a litigation overhang on the stock.
And that litigation overhang has thankfully been resolved. It related to we'll call it a failed acquisition going back a number of years. That was recently settled, which is a big positive in terms of the name. I think on Verano, one of the misunderstood pieces here is just how well represented they are in some very high growth states. They are the number 2 in Florida behind the market leader Curaleaf, and yet they trade at a big discount versus the group. This is one of those names that has often been overlooked, and certainly one that I think would warrant further attention.
And sorry, their latest results were a miss, but behind the scenes, you think the company is addressing problems?
Absolutely. If you look at what drove that miss, there was nothing in it that would have caused or would cause me concern or any sort of negative revisions to my outlook, much less to my thesis on the name. These are quality operators with quality assets in some very attractive markets.
And so generally, do you favor retailers or producers, or do you like a bit of both in a company?
Great question. It really depends on how established or how mature that market is. If you look at a market the likes of Maryland, where you have a lot of retail doors opening very quickly, you're going to favor a cultivation forward producer who's actually supplying into those doors versus competing with all of those new opening doors. It's a lot easier to be making money supplying into an explosion of retail than competing with an explosion at retail. So it really does depend, as I said, on maturity of the market, the dynamics within that market. Maryland today is a market where being producer forward would favor you, and that would favor the likes of a Terrascend. There are certain other markets where a fairly balanced portfolio would make some sense.
as you know, before decriminalization and legalization, we heard predictions, well, this industry will go the way of other consumer products industries. Maybe we'll get the big pharma buying it up or the big food companies. Haven't really seen that. I know we have seen major investments by the likes of Altria.
Yeah, and I think that those types of investments, or having big pharma or big ag coming in, that's really only going to be in a sort of federally legal world. I think between here and there, on the back of rescheduling, we see some increased flexibility. I think you can also expect to see some increased focus from institutional investors in the space. Big banks focusing increasingly on the space and the provision of a full suite of banking services. But that next level, or that next step, by way of big pharma or big ag moving into the space, I think that's a number of years out, and would be built off the back of federal legalization, should that happen.
And broadly speaking, is banking still a hassle for companies in this industry?
Banking is still a very, very big problem for companies in this industry. Essentially, you have an industry today that is north of $40 billion at retail, 40 billion US at retail, that is an entirely cash-based, cash-dependent business.
Wow.
So they cannot accept credit cards. That's potentially changes on rescheduling, should that go through. But just think about the complexity there. Smaller average ticket on cash versus credit. And then, of course, all the cash management and cash-related security concerns. Being a $40+ billion retail business and only being able to accept cash is problematic.
It's interesting. In Canada, the stores, I mean, they're legal stores, obviously, at the federal level, they can take debit cards. I'm not sure if they can take credit cards. I assume they can.
Yeah, no, the Canadian market as a fully legalized recreational market, very different sort of state of play and rules of engagement. Certainly the US has significantly higher levels of sort of significantly higher constraints and barriers in the operating for the key players.
And I guess you can't blame the banks for being cautious. Yeah, the stuff is still illegal at the federal level. Kenric, thank you very much for joining us.
No, just thank you, Andrew.
Kenric Tyghe, a special situations analyst at Canaccord Genuity.